Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, January the 16th, the year 2019. Let's talk trading. Range on the home. I'm sure you all heard that. Home on the range. I thought I'd do a little play on the words. Okay, range. Average true range, average daily range. I noticed one of the other trading forums, sites, YouTube channels was talking about indicators and talking about range, and basically, they were putting their take on it. But I like to look at things a tad bit differently. I try to simplify things. I try to get things down to the concepts rather than saying, ATR 14 is superior to an ATR of 10 or ATR 24 is better. You know, that's just a bunch of curve fitting, and it's pretty much nonsense because it doesn't do anything really to put pips in your pocket, you know. And because when it comes to putting pips in your pocket, you've got to work on your money and risk management. And so what we're going to show is how we can use the range to help you with this money and risk management. Now, basically, price has to range, and it's going to go up from the open and down from the open. We all know that, right? And if you don't, that's the way it works. So I threw a bunch of indicators on this chart that I've written, with the exception of the ATR that comes with the platform. But the point is, it's not about the indicators; it's about the range. So, for example, I've got the multimeter showing the current range right now, whether or not the candle's green or red. I've got the average range of the last 14 bars for each of the time periods and the percent range. And I know somebody's going to ask, so anyway, those indicators are from way back in 2009. And once again, it's not about the indicators. If you just learn what I'm about to show you, you won't really have to worry about the indicators. Now, I also have my range EZ. I don't remember why I called it P2. So once again, this one tells the range. We've got it at 24 bars because on the hour chart, I like to use 24. Maybe I could switch all these over here to 24. We can be consistent, but like I said, that really doesn't matter. So right here in the top left, maximum and minimum range. The top right, here's the average range. The bottom left is the number of bars and below the current range, and the bottom right, number of bars above and below the average range. So we can turn off that help screen now that I've told you what they do. Okay, so we've got, right now the range is 7 and it's 38%, okay, of the average range. So what does that tell you? What that tells you is, if we know what the average range is, okay, we can know, in this case 18, we know whether or not price will move more in one direction or the other to meet the average range. Now, of course, that's the average range. And you've got the average true range here. You can see here, it's right now it says it has a value of 0.16 or 16.7 pips. This is, let me put this, make this one the same, just so we can keep things. Okay, you see here, it really hasn't changed much. So you've got an average range using just high minus low versus the ATR. So 16.8, 16.7. We're still in the ball. So we know price needs to range. Right now it's at 41% of the range, right? So what are the chances of this bar getting bigger? Okay. And you can see here range is dropping. We went from red to green. Okay. Range dropped, bigger. Range is about the same. And now you see we even have a smaller range. So the size of the range is dying. If you're already in the trade and you see this reversal happening out of the wick zone, it's time to pick up your pips. On the other hand, if you saw that the rate that price is going out of the wick zone the other way and there's still what I call gas in the tank because the current range is below the average range, then you might want to stay in the trade to put pips in your pocket. Now, the other thing is I like to divide the range up, high minus open and open minus low. So you can see here, high minus open in the range gauge, 3 pips open minus low is 4. And that'll let you know, once again, do I have more gas in the tank or should I just go ahead and bail? And if you see the range, you know, if it's not pushing the edge, it's just staying in between, it's saying, well, looks like maybe there's no more gas in the tank. Let's just take the profit off the table. Now, the other thing about the range is whether or not price has expanded from a daily basis. Has it hit its average range or average true range? So, for example, right now, we've got a range of 2 plus 70, 72 pips. So let's go here. Look, the daily range, the average range is 137 pips. Now, remember, this number is going to be distorted for a while. Reason being is we're looking at the last 14 trading days, and we had those huge spikes here. These two, as you can see, they're way out. So they're going to throw off that average. You can see here what's happened because of these 2 days. And down here you can see it's just the range was just crazy. So you have to take that into consideration when you're looking at range. So what we want to do is we want to see whether or not price has expanded. And what I've done is, now this particular indicator, which is the ATR lines high low, what it does is it looks at the daily low right here, and it adds a range of ranges. What do I mean by that? We look at the minimum ATR between ATR starting at ATR 2 up through ATR 14. The indicator calculates those numbers, each one ATR 2, 3, 4, etc., finds the minimum, finds the maximum, and then it says, okay, from our current daily low, here's the ATR range from the minimum to the maximum. That way you don't have to worry about, do you have the right number? The indicator figures it out, and it says, hey, what happens if you get in one of these ranges? Usually, price has exhausted itself, and then we'll reverse. Now, I think there was a euro, one of the euro pairs. Let's see. I thought I saw one earlier that was in the lower ATR zone. Well, here's one that was close on both sides. I don't remember if dollar yen hit it or not. Yeah, here's a perfect example right here. dollar yen. It hit the, Larry live trade here. It hit the minimum of the ATR, minimum ATR, and then there's the max ATR for 10 periods and 4 periods. So you see here, price came up, put in a highest open, H1 highest open, and it's reversing. So you can take the short here or take the short out of the zone. So it kind of gives you confidence that, hey, there's a really good chance price will reverse, because you can see here, highest open, yeah, it reversed. And then if, depending on where you put your stop and take profits, you see it came back the other way, went kind of, had a nice expansion here on this one candle, and then it continued. Now it's reversing. So what I'm saying is that you can use ATR, but some people say, well, it's a momentum indicator. That, yeah, you can look at the candles and see if the momentum's slowing. You don't really need an indicator to show you that. But what you can use ATR for is to say, hey, has price moved about as far as it's going to go for the day? Especially for people trading the rat zone, you're trading holo, you're trading 1, 2, 3. Those are all reversal strategies. And so that's when you look to reverse. And so you can see here, and also a wick zone can be a reversal strategy too, because if you trade out of the upper wick zone to short, you're looking for it to reverse down. If you trade out of the lower wick zone, you're looking for it to go long. So also with the wick zone. So that's what I wanted to show you guys today, traders today. It was about the ATRs and a range, because there's a lot of information put out there. Some of it's really good, some of it I think just misses the boat. But with the ATR, I don't look at the squiggly. I'd rather look at a histogram to show me what the differences are so I can see. And then again, you can basically use your eyes to see, is range getting bigger or is it slowing down? By slowing down meaning getting smaller. So, are the buyers still there? Are the sellers still there? You can look at it by the range. And sometimes you see consolidation, price just oscillating. And then you see when price is really expanding and moves outside of that range. So you have daily ranges, weekly ranges, monthly ranges, 1 minute ranges. You've got all the different ranges. You just have to pick what time frame you want to trade on. And I like to use the hour. It's a good rule of thumb. To trade with that hourly candle color. So you can see here between these two charts, it's the same chart basically, but one with the lines and one without, so you can learn how to visualize. You can see here it's made a new high. Just use your eyes. Yeah, it's making new high. And so hey, it did make a new high, came out of that H1 wick zone, and look what happened. And then you can come over to a chart like this and say, oh yeah, AD, average daily range here. And for the yen, once again, remember 107, only because of those huge ranges the first couple of days of the year that were just crazy. So, fellow traders, let's see, is there anything else? And once again, looking at ranges here. See, we've got 1, 2, 3, 4, 5 over 100. So, there you go, fellow traders. Let me know if you have any questions about ATR. You know where to find the free indicators that I make, and where you can download them without sending donations or anything like that. So it's not what you trade, it's how you trade it. So get out there and drain the banks.